Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk to you about impact investing. According to Fidelity Charitable, they conducted a survey where 62% of millennial investors feel that impact investing has greater potential than traditional philanthropy to create long-term positive change in the world. So what is impact investing, and how can we use this knowledge to raise funds for our organizations? So let's start with the first question. What is impact investing? Basically, it is the individual person is investing in companies that create purposeful social and environmental changes in the world. Basically, those changes, the things that they're doing are aligning with the investor's core values. Sometimes this is called socially responsible investing. And we can invest in companies whose missions are aligned with the investor's mission. Like we said, working with companies maybe that do solar energy if you're concerned about the environment, that kind of thing. But we can also choose not to invest in companies that don't meet this criteria. So if you're interested in the environment and you feel like fossil fuels are something that's creating a problem, you would not invest in an oil and gas company. But this can also include donating to nonprofits in their projects, either through the companies that they're doing this for or directly by giving them a charitable donation on their taxes, which is also helpful. They can also support organizations that have higher risk projects or other things going on that may not seem financially viable that a for-profit company would want to take on. So maybe they can pool their funds and donate to one of these nonprofits that are a lender to other nonprofits. That's the kind of things that we're talking about. So this whole impact investing is a strategy that's based on the idea, as we said, that's the investing in companies that align with the investor's core values and what they want to see happen in our world and to change the world for the better and to realize some financial returns. So they're getting two pieces of impact for the same dollar. So in the past, impact investing has been really driven by interest among wealthy individuals and among women. But it's becoming more of a generational thing where the millennials are really pushing this to the forefront. According to that 2021 survey by Fidelity Charitable, more than 40% of millennials say they have actually engaged in impact investing versus 20% for baby boomers. And because of this growing trend, institutional investors are now incorporating impact investing into their portfolios. So there's many different ways to invest in socially or environmentally impactful businesses. There's mutual funds and other investments that include companies that have the same values as the investor. Many of these portfolios include faith-based criteria, environmental practices, and human rights criteria. But these companies are also those investment portfolios are also avoiding companies with what's called the sin stocks. For example, producers of alcohol, tobacco, and weapons. These companies make charitable donations on a regular basis. You can invest in stocks that do this for those companies. You look beyond what product or service they're preparing, but what does that company do for their philanthropic efforts? What are they investing their philanthropic dollars in? And millennials are doing this research and investing in those companies. And they're also investing in organizations that invest in projects that are a little bit higher risk. Maybe you want to create some short-term housing for your constituents. That's quite an investment in brick and mortar, and it's very expensive to do. So it's hard to raise funds for that. So you have all the money up front before it starts to happen. So maybe you're looking at a loan, and is there organizations out there that do that? And millennials are looking to make a little bit of an interest income off of that loan, but also see that this important thing is happening. So what strategies can we take into account when we're approaching, looking at this and being a part of those dollars that are being given to nonprofit organizations or loaned to nonprofit organizations so that we can help our constituents? And it really does come down to, as in all good fundraising and development practices, good relationships with the donors, good relationships with the corporate businesses that are having these impactful ways of doing business. Now, it's more than just these traditional foundation grants. We're always looking at foundations, but looking at corporations for their grants or their donations from these for-profit companies, because they're being successful because they're receiving an influx of cash from these millennials. And you may think that, these companies, what they're doing doesn't exactly align with your mission, but their social conscious is telling them to do this or that may align with their mission. And even, you may have an organization that's dealing with sex trafficking and a corporation that's donating to sex trafficking. But there are other things to think about. It may not be so straightforward. I want to bring up Bombas socks. They advertise that for every pair you buy, one pair is donated. And I know that is true because I have a client who receives socks from them every year. And this organization provides meals to those, good, healthy meals to those who don't have access to that. And when they're out providing meals, they have these socks and they're giving away these socks. And Bombas's really only requirement for this organization is they don't charge for the socks. They are required to give them away. So that's a wonderful thing. So think about things that are in line, but not exactly that you wouldn't think, food and socks go together, but they do because it's the same population that needs the food, that needs the socks. So be a little bit more creative in your thinking there. Try to do some peer-to-peer fundraising as well. Think about peer-to-peer fundraising and these donor advised funds. Meet with these portfolio managers and talk to them about how to get your organization on the list of recipients for these donor advised funds. And then we want to have good relationships with individual donors. Millennials love to get involved. Just this past week, I met with a Purdue student. She's an engineering student. It was such a wonderful conversation. She has, in this past year, raised $7,000 for a charity that she volunteers for by holding an event. So now this is a college student at a one-time event, $7,000, her first time ever doing this. Her career path is not nonprofit organizations, but she wants to be involved in them and she wants to make a change in this world. And she's already involved with the board of that organization by performing support duties that the board needs. So that's the kind of passion that millennials have for what we are doing. So, reach out, create those peer groups for these millennials because they love to work in groups. Stereotypically, I'm sorry, but they love to work in groups, and that social aspect is very attractive to them. So doing things like this is just a great example of what we can do with impactful investing. And then finally, does your strategic plan include a project that requires a huge influx of resources? And do you have alternate funding sources from like a donor advised fund, a lending fund, or even an individual or a business who's willing to provide a loan at a lower interest rate? So those are the things that we need to consider. Now, impact investing is not all millennial based. but they are the biggest driver of this type of investing currently. And the purpose of impacting investment is not only to create a revenue stream for the investor, but to encourage long-term change in the world. And as nonprofits, you know that you are the driver for this change. So please take advantage of this increasingly significant type of philanthropy. I hope that this has been helpful. And if you have any questions on this topic or any other topics that you would like us to cover, please put that in the comments section below. And of course, we always appreciate your likes. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.